Silver prices to boom in 2023. Here's why. So we've been seeing more articles in mainstream media about gold and silver. Here, CNBC says silver prices could touch a 9-year high in 2023 with a bigger upside than gold. I totally agree with that. And here, gold and silver boom predicted as US hits debt ceiling, dollar devalues. Expert says government spending is a major problem, and it absolutely is. And some people say that this is a contrarian. This isn't good when mainstream media are starting to talk about gold and silver, that it's likely to go the other way. Well, I don't think so. This is a good sign, in my opinion, because more and more mainstream people watching this will see it. Also, the algos, the more articles, the more talk about gold and silver, the algos pick that up, and then we just start getting more capital flow into the market. And what are the reasons behind it? Well, right here, this expert says, and I don't know who the expert is, I didn't read the article, but says that government spending is a major problem. And it definitely is a major problem. And, as more and more people wake up to currency being devalued, as CPI and inflation really start to hit hard, seeing articles like this on mainstream media, they'll then go, oh, gold and silver, what's that all about? Go and search it. They might find Mike Maloney's Hidden Secrets of Money. That was a really good episode, and I certainly, when people who have no understanding of gold and silver ask me about it, or they hear, oh, Steve's the gold and silver guy, go speak to him. I just go tell them, look, just go watch Mike Maloney's Hidden Secrets of Money and then come back and talk to me, because that saves me so much time going through the history and just educating people. So I actually think this is a good thing. So if that's true, and we do see gold and silver really making a big move in 2023, and silver outperforming gold, there's clearly a large divergence. In fact, this chart says that there was a divergence back in 2008-9 during the GFC, but really you could argue since 2014 that there's been a divergence, and silver is much more undervalued than gold. And that is why I have more silver than I do gold. Gold I look more as a store of value, store of savings, insurance, call it what you like. Silver and gold isn't something that I trade. Silver I trade more. And towards the end of the video, I'll talk about where I believe we're about to see a new wealth cycle, a silver wealth cycle, for those who didn't see my last video. So, yeah, I'm definitely very bullish silver this year and probably the next couple of years, maybe even out to 2025. But at some point, I will sell my silver and buy other assets, because as you guys know that follow this channel, and for our insiders, I'm very bearish on risk on assets. I'm very bearish. So I think gold and silver is definitely the place to be, and I think it's a very conservative place to be, even though I think it's gonna profit very, very well in the coming months and years. And you all probably remember Zoltan Poszar came out with a checkmate-like situation, says that the Fed will restart QE by the summer of 2023, and that's the summer, I'm talking US summer. He says, but don't expect the put under government debt to prop up risk assets. Unlike QE in the context of low interest rates and a risk asset put, the coming QE will be in the context of Treasury market dysfunction. We started seeing that in the UK, didn't we? And so this isn't about saving risk on assets. So what we've experienced since the GFC about just pumping and propping up risk on assets, real estate, stocks, etc. Forget it. As Danielle DiMartino Booth says, and I agree, as forgotten his name now, says that we've probably seen Powell and the Fed put in terms of stocks. You know, that the so-called Fed put, as soon as stocks are down, well, you know, Fed comes in. And I think we've seen the end of that. And I agree with them. I agree with them. I think Powell wants to end that. However, I also agree with Zoltan that there is going to be Treasury market dysfunction. And in the corporate credit markets, I expect probably dysfunction there to begin before the Treasury market. And I'll talk maybe more about that in another video, or I might do just a private video for our insiders regarding that. And so we're not going to see that. But what it means is we're going to see basically the monetary system in trouble. And the Fed with Treasury are going to have to do something about it. And once again, that is why holding, I think, gold and silver is going to do exceptionally well, while risk on assets continue to fall. And really, we haven't even seen those falls yet. They're coming, in my opinion. So that's where I believe that silver wealth cycle is just primed, ready to go. And if you have a look at this chart of the 2-year, 3-month swap, and versus the 1-year and 3-month swap, you can see that the spread has gone, well, very negative. You can see that, and that does tell us that the Fed will be cutting at some point, or the market believes that the Fed is going to cut. And if you have a look at the 2-year Treasury, Jeff Gunlock talks about that a lot, and the 2-year Treasury leads the Fed. However, I don't think it's imminent. I do align more with Zoltan that it'll be sometime in the summer, at the earliest, before we see the Fed cutting rates and doing QE again. Because I think we need to see things in the bond market, so the credit market in particular, and then the Treasury market to break, and that's when the Fed are going to be forced to come in. Not the stock market, not the real estate market, but the credit markets, as in the corporate credit market, and the Treasury market. And I've done videos on the past, when central banks cut, when the Fed cuts, generally it's when something's broken, when we're going into a deep recession. And then just because the Fed is cutting doesn't mean risk on assets start booming. In fact, they continue to fall. I can't remember the average off the top of my head, but it's plus 20%. It might even be 27%. I can't remember. I've done videos on it before. So, yeah, I'm with Zoltan that even though the market is, whether you look at the 2-year, whether you look at the swap here, the Fed will cut. But I think the market's predicting that we are going to see problems in the bond market. So, yeah, watch this space. So when you look at Zoltan and how he is saying to, allocate capital in your portfolio, he's almost saying go the Dragon portfolio. And this is Chris Cole from Artemis Capital, came up with the Dragon portfolio. And if you don't know about the Dragon portfolio, I have done a video on it called Own 19% Gold. I'll put a link in the description below, where Chris Cole argues, based on his research and backtesting, that the best performing portfolio is the Dragon portfolio over a long period of time, and that owning 19% of gold in your portfolio is the right amount. So I'll put a link in the description below, but that's pretty much what Zoltan is arguing, is go the Dragon portfolio. And here's a chart, something from Bank of America Securities, their global research department. They say by the world, global stocks to outperform US stocks in 2023. But down the bottom, not sure if you can see it too well, but their top 10 trades for 2023. They say long the 30-year US Treasury because they think that the Fed's going to cut, and so there'll be capital appreciation in the 30-year. As you guys know, and in our insiders, I'm long very short-term T-bills. So I've just parked that really for dry powder, and getting, for me, I'm getting 4.6% yield on that, which is helping with the CPI, losing from the CPI, but maintaining dry powder for, as I said, I think risk on assets are headed for trouble. Short US dollar, well, I'm long US dollar. Dollar milkshake theory, done videos on that. Not going to go into that right now. So that's where I differ with these guys. Long China stocks, I'm short China stocks. I'm very bearish China altogether. Long gold and copper, there we go. I'd add silver into that. So long gold and copper. I'm guessing they're long copper because of China reopening and believing that we're going to see a bull market in China. For our insiders, I'll talk more about China reopening in a separate video just for you guys. But definitely long gold and copper. You insiders know we've got a handful of copper stocks that we really maybe got a bit lucky, but we really did buy them at the bottom of this cycle, and they're up very nicely from where we bought them. So our insiders will know that. And then long industrials and small cap stocks. Once again, our insiders know that we're big on small cap stocks. We love small cap value in particular. That's where we really try to focus and find really good stocks that are valuable, but in the small cap that become large cap companies. That's what we look for. Short US tech, yep. Short US private equity, yep. And then here, long EU banks and short Canada, Aussie, New Zealand, Sweden banks. Why is that? Those four countries, you have a look at charts of house prices, how overvalued they are on so many metrics, and what higher interest rates, negative savings. There's just so many things that are saying, and even charts now showing Canadian, Australian, New Zealand, Swedish house prices falling at very fast levels, actually. And once again, I've done videos on this as well. And I am short Aussie property and therefore short Aussie banks. So that's quite interesting from Bank of America there. So as you guys know, I'm very much of the belief that we're in the early stages of a commodity super cycle. And when you look at a chart, each super cycle peak has these what I call mid-season peaks. And yeah, we saw that mid-season peak. And well, but investing over a cycle like this is a long-term deal. And as you can see, it can be quite volatile. And at times they can, commodities can fall very sharply. And, unless people know what they're doing and know the reasons why they have invested in certain commodities or the commodity sector in general, then you're going to be shaken out in these moves. I love when certain commodities fall, and I love it even more when commodity stocks fall even further. It's like, thank you, Mr. Market. But it's also a reason why I will never, ever give financial advice. This channel never gives financial advice. I will never give financial advice. I will never manage anyone else's capital other than our own family's capital. I don't need to. I don't need to make money charging fees to manage other people's capital. But most importantly, I don't need the ongoing counseling and managing people's expectations, because I invest over the long term. I get excited when I see a stock pull back 50%. Most people couldn't hand a stock falling back 10% without jumping up and down. Steve, should I sell? Should I sell? Been there, done that. Never again. Never, ever again. I don't need that worry and that hassle. I'll only ever manage my own capital moving forward. And this is why. Have a look at this. Odds of losing money. The longer the time horizon, the odds of losing goes down while the odds of making money go up. I'm a long-term fundamental value investor in general, but I use Austrian economics to help me look at different sectors. There's times I'm bullish commodities and there's times that I'm bearish commodities. I have no love for any particular asset class. I've bought and sold silver. The only thing I haven't sold is gold. I've just slowly accumulated gold over time at all sorts of different prices. But I've bought silver and I've sold silver, and I'll do it again. I will not just buy silver and sit on it. I use wealth cycles. And I invest over the business cycle, which is actually a much shorter time period than this. And that's looking at the Austrian business cycle theory. And then looking at base metals and other commodities, where are we bullish? I've been bullish copper. For our insiders, you know that we've just started getting excited about nickel. We have in the past, and we are now. Zinc is something that we've got exposure to. But copper is one that we, besides our precious metals, copper is our next favorite commodity. Just because of the fundamentals. And you can see pretty much every energy source needs a lot of copper. EVs, that's not even on here. Construction, all sorts of infrastructure is copper. And, well, we know what's happened with the old copper mines are running out of life, and there has not been enough capex and exploration done to replace some of these old mines, which their shelf life is getting very thin. And so just the fundamentals longer term, this decade, super bullish copper. And when it comes to energy, electricity, for example, you know, everyone in the West, you know, we're banning coal. You know, we're getting rid of that. We're banning gas. We're getting rid of that. Now it's what, gas stoves? Just ridiculous. The West literally are collapsing. Just so, as they say, go woke, go broke. But what are China and India doing? India, I expect tremendous growth over the next 30 years. 30 years plus. And I can tell you they're going to be investing a lot more in coal and nuclear, probably gas as well. So there's a lot more growth coming for these. And you guys know, especially our insiders, know how bullish I am on hydrocarbons, just for basic economic reasons. But our insiders will know I have taken some profits on some of our coal stocks simply because we've had 10x gains. We've had huge returns, and we've taken a lot of those profits off the table, but we still own a number of coal stocks that are still up 4, 5, 6 times from when we bought them. Definitely been our best performing asset class since 2020 is coal, 100%. But uranium is definitely a longer term play, gas as well. Yeah, these are where we're bullish. So we're bullish the metals, more so silver than gold. We're bullish copper in particular, but nickel, zinc for the base metals. And then we're still bullish hydrocarbons, very bullish hydrocarbons. So if you guys haven't seen my last video, Silver's Wealth Cycle, I'll put a link in the description below. I believe this year we're going to see a huge move up in the precious metals, while at the same time risk on assets fall significantly. It's also why I've parked a bit of capital into short-term bonds. It's all about having dry powder. But what I will be doing with my large silver this is the most silver I've ever held. And if you watch this video, I share my previous story about wealth cycles and how I turn, silver, $60,000, $67,000, $68,000 worth of silver into almost $800,000 in assets using the wealth cycle. And I believe this year could be the year that we see that happen again. Now, obviously, I jumped into silver back in 2020, or actually back in 2018, 19, but really in a big way in 2020. But now I believe we're going to see the fruits produce with this silver wealth cycle. So check out this video. Also, if you want to know more about our portfolio and how we invest, send me an email to the email address below. This is our Finance Uncut Insiders Report, weekly report. I'm not going to go into any details right now, except to say we are closing this at the end of March. So at the end of this first quarter, we will not open Finance Uncut Insiders to anybody else. It'll be closed. So if you want our Finance Uncut Insiders Report, where you see my portfolio, my personal portfolio, all of my research and analysis, my market commentary, my analysis on everything economics and financial markets, then send me an email to the email address below and request more information. We'll send you more information. Otherwise, guys, what do you guys think? Do you think it's a good thing that we're seeing silver in particular being mentioned in mainstream media more? What do you think of Zoltan? Do you think we are going to see the Fed pivot around summer, early summer, late summer? And what do you think of the silver wealth cycle? Do you think 2023 is the year for silver? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it. Take care, everyone, and I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.